Walmart numbers were good. That means the consumer's trading down. The Target numbers were bad. That means the consumer's trading down. The retail sales numbers were okay. That means they're still spending. Is that the right read?
I think it's slightly off, and I'm no retail expert, but what seems to be happening is people are shifting the mix of what they are buying. For example, they're buying more food. Grocery stores did well, but clothing stores were flat and department stores were down during the month in terms of retail sales. So what it looks like is a store like Walmart that has a much bigger grocery groceries are a much bigger part of its business is going to do better. Also, Target had inventory problems, as you mentioned. Not all stores are going to have that, and a number of analysts that I've seen on the Bloomberg are suggesting that maybe Target has some one-off problems. If you look at the retail sales figures, though, in general, it is good news. We have seen more people using credit cards, though, to buy stuff. So the question is, how long does that spending pattern keep up, and does it go through the holidays?
Right, and that's also, though, why I wonder if it's more of a earnings issue. And Kriti, this is where you can help, is that are we just really learning how investors are reacting to disappointing on their earnings numbers versus a broader economic signal?
I think that is it. Part of it's going to be the inventory story that Mike kind of alluded to. Now, he did bring up the point that this is spending on credit, whereas before it was spending on stimulus, which I think is a big game changer for the eco front. But for the stock front, the stock really responded to these inventory levels. And you saw it yesterday, too, between Walmart and Home Depot, because both of those companies beat on their top and bottom lines. They both had massive sales, massive profits. But Walmart had cut their inventory rise by, I think, 50%. Home Depot didn't make that kind of progress. In fact, they said they're still worried about the inventory buildup. A similar story with Target and Lowe's, by the way. Lowe's came out and said that, look, we are increasing our full year profit forecast. That is a big deal to do at a time when everyone else is pulling back. Target saying, well, look, not only can we discount and still not make up the losses that we're going to get on the inventory, on top of that, we still have to cut, I think, about $2 billion. I think that's the game changer for the bottom line. It's the inventory story, despite the fact that people are still spending, and it is true, they are spending. But look, Target and Lowe's, for anyone who shops at Walmart versus Target, I lived very close to both supercenters growing up. Target and Lowe's are known as slightly more expensive alternatives. So if you're worried about an inflationary environment, if you're worried about recession, you aren't going to be grocery shopping in Target. You're going to switch to Walmart.